Have you ever wondered how businesses really work? Under the hood? Well, you are in exactly the right place. Today, we're going to decode the absolute basics of accounting. We're breaking down the language that every single company on Earth speaks.
So how does a business speak? It's a great question, right? And the answer is through its numbers. But here's the thing. Accounting isn't just about math. You've got to think of it as the universal language of business. And once you learn its grammar, its rules, you can understand the story of pretty much any company on the planet. So here's our game plan. First, we'll talk about why we even call it a language. Then we'll meet the core building blocks, the basic words you need to know. After that, we'll uncover the one golden rule that holds it all together. We'll even see it in action with a simple example, and finally, I'll show you where all of this pops up in a company's financial X-ray.
Okay, let's get into it and build that foundation. It's just like any language. You can't write a novel if you don't know the alphabet, right? And you can't really understand a business without knowing its vocabulary. Fluency here starts with mastering just a few simple core words.
Because really, every transaction, every report, every single business decision, it's all telling a story. And getting that story, really understanding it, only becomes possible when you know what the key terms actually mean. So, let's get to them.
All right, it's time to meet the fundamental building blocks of accounting. Think of these as the nouns and the verbs of our new language. Once you get these down, you are well on your way to understanding the entire structure of any business out there. First up, assets. This is pretty simple. It's all the valuable stuff a business owns. We're talking cash in the bank, the products on its shelves, the inventory, or even the building it operates from. Basically, if it's something that will provide value down the road, it's an asset. Now, on the other side of the coin, you have liabilities. This is everything a business owes to other people or to other companies. Things like bank loans, money you owe to your suppliers, even that electricity bill you haven't quite gotten around to paying yet. And then there's capital. You'll also hear this called equity a lot. This is the owner's personal stake in the company. So if you were to sell off all the assets and pay back all the liabilities, whatever is left over, that's the capital. It's their true piece of the pie. Okay, so we've got the nouns of our language down. Assets, liabilities, and capital. Now let's look at the verbs. The action words that actually cause these building blocks to change. First up is income, which is also called revenue. This is the money flowing into the business from its day-to-day activities. We're talking about cash from selling products or providing services. This is truly the lifeblood of the whole operation. And of course, you've heard the saying, you have to spend money to make money. Well, that's where expenses come in. These are all the costs of just running the business. Things like paying rent for your office space, employee salaries, and yep, keeping the lights on. Finally, there's a term called drawings. This one's simple. It's when an owner takes cash out of the business for their own personal use. Now, the crucial thing to get here is that it has a direct impact on capital. Every single dollar the owner withdraws as drawings directly reduces their stake in the business. So now we've got all these pieces on the board. Assets, liabilities, capital, income, expenses. But how do they all fit together? Well, they aren't just a random list of terms. They're all connected by one beautiful, unbreakable golden rule that keeps the entire system in perfect harmony. Seriously, this is like the law of gravity for accounting. It's the core principle that makes sure the financial story is always complete, and this is the most important part, always in balance. And here it is, the accounting equation. Assets must always, and I mean always, equal liabilities plus capital. Think about it. What you own is either funded by what you owe, that's liabilities, or by what the owner put in, that's capital. It just has to balance every single time. This is the central truth of it all. Okay, theory is great and all, but let's put this golden rule to the test. Let's make this whole thing concrete with a really simple example so you can see how this powerful equation actually works in the real world. So let's say an owner starts a business by investing $500,000 of their own money. So what happens? Well, the business's cash, which is an asset, goes up by $500,000. And at the exact same time, the owner's stake, their capital, also goes up by $500,000. So you have assets on one side, capital on the other. See? Perfectly balanced. And this brings us to a super crucial point. Every single transaction that happens in a business will always affect at least two of these elements. Always. That's the mindset you gotta have. One thing goes up, something else has to go up or go down or shift somewhere else to keep that balance. Okay, let's test this out. Your business pays its monthly rent with cash. Just pause for a second and think about it. Which two items from our building blocks are affected here? Did you get it? Your cash, which is an asset, goes down, and at the same time your rent, which is an expense, goes up. That is that two-sided effect in perfect action. So why does all this matter? I mean, why are we learning this? Because these are the exact terms you are going to see on a company's official financial reports. And you can think of those reports as an X-ray of the business's health. And this is where it all comes together. Your assets and your liabilities, they live on a report called the balance sheet. It's like a snapshot of what a company owns and owes at one moment in time. Your income and expenses, well, they get used to calculate your profit or loss. And finally, that profit, minus any drawings the owner takes out, is what ultimately changes the owner's capital. You see how it all connects? It's a perfect loop. So you see, at the end of the day, that's what we're really learning here. It's not just math. It's a narrative. It's the story of a business's struggles, its successes, its strategies, all told through this incredibly elegant and perfectly balanced language. And that right there is the real power of this. Once you know the vocabulary and the grammar, you can start reading these stories for yourself, everywhere. So I guess my question to you is, now that you know the words, what stories are you going to start to see in the numbers all around you?